Good morning and welcome to Dornbusch download number 93. Getting ever so closer to that magic 100 mark. But we're fortunate enough today to have Brendan along with us. You've popped up here and there, Brendan, done a couple in the past. Brendan here is our paraplanner and does a lot of the hard work really, the analytical work, and a lot of our stock selection work. So, Brendan, you're going to just have us give us a bit of an insight as to some of the, techniques that you use when you're looking at shares, and predominantly from a charting point of view.
That's right. Yeah. So we're just going to touch on it very briefly. But looking at charts really is a historical tool. We can sort of look back at the share price of a company in relation to where it has been. So the first chart we got is BHP, and you can see back in 2004 that it was around the $14 mark, and then again it reached that at the start of this year. But in between that time it got to $45. So I guess looking back at January, you'd sort of think, well, maybe it's quite cheap, around $14. But of course, BHP's cheap for a reason, so it's had a few issues. So it's come down, but yeah, just using the actual price there as a bit of a tool, just to see where it's located. Really just looking at the past trading history. So that can be helpful for an entry point or exit point. So yeah, that's just one thing you can use for charts.
We do a lot of analysis here, of course, and this is more the technical analysis side, isn't it? Looking back at the charting history and trying to sort of picture, I guess, as you said, basically where pricing has been relative to a period in the past. Of course, there's a myriad of different techniques used, and I know you're going to talk about moving averages and things like that as well. So
yeah, that's right. There's a couple of moving averages we use here is the 50-day and the 200-day. So with regards to that, the 50-day is the average previous 50 days price, the finished price of the stock, and the 200 days the average of the previous 200 days closing price of the stock. And there's two lines on the second chart. You'll see the I think it's the green line is the 50-day moving average. You can see where that crosses above the 200, and there that sort of indicates more of an uptrend. And then again, you can see where the green line, the 50-day moving average, crosses below the black line, which is 200, and that generally indicates like a downtrend. So that can be another helpful tool when looking at investing as well.
Yeah, no, it is, and they're handy tools, I guess. And moving averages are more of a sign of trend, aren't they?
That's right.
The 50-day moving average, of course, are showing a shorter term trend, with the 200-day moving average being the longer term trend. And as you say, Brendan, I mean, certainly the 200-day in particular is very commonly used across the investment world. But yeah, they are two reasonably reliable indicators, aren't they? Ultimately, there's no absolute guarantee with these sorts of things. But certainly, yes, the death cross and the golden cross, as they're often referred to, do give us some insight as to how the stock might be trending at the time. But there is a myriad of different indicators, isn't there? Some people refer to technical analysis sort of as the dark arts of investing. There's momentum indicators, there's oscillators, Fibonacci levels, all of these sorts of things. So, there are certainly some good history that tells us that some of these things can be quite reliable, and it can also be a matter of if the market's looking at these things generally, they can be sort of self-fulfilling prophecies. So, but if you'd like some more information on technical analysis, we're more than happy to introduce, maybe an indicator or a technique. But just let us know if you'd like us to include it as part of a more regular part of the download. I guess, Brendan, to the world generally, fair bit happening at the moment, isn't there?
That's right. We have the Brexit.
We're going to get sick of that word after a while, aren't we? But yes, no, it's certainly on everyone's lips at the moment, isn't it? With the vote coming around as of the 23rd of June.
That's right. Yes. Yeah. So we've got that coming up, haven't we? So,
Yeah. And how are the sort of statistically? Well, what are people thinking there? Is it a goer, or will they stay?
Well, I think it's about 50-50 statistically. So, but the bookies have it sort of more of a stay. So from what we've been reading this morning, I think it's they're paying 1.6 to stay and 2.3 for the leave. So they're still looking to stay. It's the go.
Yeah. So the betting agency
yes,
sort of
if you're a
selling us.
betting person.
Yeah, I think it's about 65% chance probability that they'll stay. I guess we'll find out, of course, in due course. But ultimately, it's just creating a lot of instability out there, isn't there? So
we've seen that here, haven't we?
Absolutely, yeah. So I don't think markets will react kindly if the UK don't go. Markets like to see that stability, and hopefully they end up staying just from a short-term point of view. But I guess, depending on your opinion, I guess, whether they stay or go, we'll find out eventually anyway. But also, Brendan, too, a lot of activity central bank-wise as well.
That's right, yeah. So there's, I think, the Fed coming out on Thursday. So they're looking at, the expectation is that they'll stay at their 0.5%. Then we've got Japan, so that's again on Thursday, and the expectation is staying at negative 0.1. And we've also got Switzerland, which is also expectations to remain the same, negative 0.75, and Great Britain, again, expecting to stay at 0.5% for interest rates. So, so everyone's sort of staying the same.
It's an extraordinary period of time, isn't it? We'll look back in history at this period of interest rates either being at close to zero or even negative, as in Japan and Switzerland. So it's actually costing you money to have, to have investments with a Japanese or with a Swiss bank at the moment. Right. But a lot of this monetary policy stimulus still not giving the growth impetus that it was that we were sort of hoping for. So interest rates are going to remain very low for extended periods of time. Of course, we've got deflation in Japan and also creeping into the Eurozone as well. So no real joy on the interest rate front there if you've got money in the bank. Of course, we've got a critical period of time, I guess, for our Reserve Bank, particularly as those next lot of inflation figures come out on the 27th of July. But again, for here in Australia as well, expectation is we're probably going to see at least another interest rate cut, and the doomsdays are saying even maybe 2 interest rate cuts. So again, we'll watch this space, but certainly central banks across the globe really still batting down the hatches, looking at keeping interest rates low, trying to stimulate their respective economies. And on the share front, Brendan, we've been watching a little healthcare company, Mesoblast.
That's right, yes.
Bit of a touch up there yesterday.
42%, I think. So down a bit.
That's got to hurt a bit. Yeah, absolutely. Yeah. So what happened? What happened on that front?
Well, they had one of their partners in the agreement. So with that, they really, I guess, brought some more instability into the company, and that resulted in the share price fall. So now Mesoblast has full ownership of their technology, which is it's stem cell research for the heart, I think.
Yeah. But it's an interesting concept, isn't it, this stem cell therapy? And as you mentioned here, Mesoblast looking at sort of creating some sort of eventual cure for heart failure and heart problems. But yes, I believe that the big partner was a Israeli-based company, Teva Pharmaceuticals. Effectively now wanting to go their own way and leaving Mesoblast with we basically had the rights to the technology, but of course without a distribution partner, and probably more importantly, without a big cash reserve partner. That's I think where the market's struggling with them at the moment. So we're probably expecting more capital raisings on the Mesoblast front. But mate, very busy week for us. I think we've just about touched on pretty much everything we can for the time being. But thanks again for watching. Thanks, Brendan, for tagging along today.
Thank you.
And we'll see you next week.